Hi everyone, I'm Mirela Ciobanu, lead editor with The Papers, and I'm excited to welcome Jason Ekberg, lead of Global Digital Assets and partner of corporate and institutional banking practice at Oliver Wyman. Hi Jason.
Thank you. Nice to meet you.
Yeah, and today we continue our video series on blockchain-based payments with an exciting discussion about closing the chasm between traditional finance and DeFi. The idea behind this interview was sparked after reading Jason's insightful piece, Will Crypto Close the Chasm on blockchain, being perceived as the transformational technology that could shift how virtual and real assets are represented, owned, and transferred. In 2025, the Papers is diving deep into Web3 payments to help businesses and consumers feel more confident in leveraging Web3 payment options like stablecoins, tokens, and CBDCs for faster, more efficient money movement, both domestically and globally. Today, Jason will share his insights on how crypto is reshaping financial services landscape and how to enable adoption of crypto blockchain payments in traditional finance. Plus, we plan to reveal some surprising facts about how the landscape might turn this year in 2025. So grab your coffee and stay with us for the next 20 minutes. Without further ado, let's start. Jason, please tell us something about your professional background and how you developed this passion for payments and digital assets, blockchains, all this.
Certainly. Well, I guess as a starting point, my experience with payments was not an original goal. It just kind of happened serendipitously through the different jobs and experiences that I've had. I actually started my career out as a corporate treasurer. And as a corporate treasurer, you're clearly dealing with operational as well as treasury money movements. And so payments is very important there. After that, I became a banker and spent some time at two different global banks where I focused really on treasury advisory and liquidity solutions. And in both of those cases, payments was also very important, especially if a client is trying to improve their working capital. They want to have effective payment efficiency as part of that because nobody likes delays and nobody likes the implications to financials. And then I got involved in consulting, and clearly payments is a large global theme, be it retail or wholesale. And I got involved in consulting, and payments has been one of those classic themes, that I've been working on for the last 15 plus years. And I think what's interesting is, as an introduction to myself is, having worked in the US for, let's just say 10 years, having worked in Asia for 15 years, having spent years in the Middle East and Africa, and now in Europe, it's really interesting to see how all of the different payment ecosystems, market structures are so different. So that's a quick introduction to me.
Wow, I'm so impressed. Oh my God, you have such a global experience when it comes to payments. So you mentioned 10 years in the US, then 15 years in Asia, then in MENA region, Africa. So, and also you talked about treasury liquidity efficiencies. And I have a feeling that, yeah, you also experience, let's say, inefficiencies and lack of liquidity and slow transfers. And this, in a way, kind of it's a perfect segue for me into asking, did you see kind of a solution in blockchain or distributed ledger technology? Hence, now you are also part of Oliver Wyman as consulting in digital assets.
Yeah, well, so there's definitely an opportunity for blockchain in financial services and specifically in banking and specifically in payments. There's a clear role for this. And we touch on this in our paper that you mentioned earlier, kind of crossing the chasm, will crypto go mainstream? And what I would say is that I think it's important when we talk about payments or we talk about digital assets, we're very clear that there are different use cases here, right? There is crypto as an asset class, ETFs, actual owning the underlying BTC or whatever it is that you own. There is clearly payments, and payments, if we look at, crypto, what we tend to see is, crypto is primarily an asset class. Yes, it is used in payments, but the primary foundation for it is as an investment. But you're also seeing, kind of payments such as stable coins coming alongside. So you have, on the one hand, as an asset class, on the other hand, you have it as a technology for payments, including stable coins and CBDCs as an example. You then have tokenization, real world assets, which is important for both investors who want exposure to different asset classes. It's important for the manufacturer because it tends to be more efficient, allows you to slice risk differently. And clearly, bringing that together creates a very nice synergy, but real world tokenization is taking some time to develop. So that's a third kind of quote unquote use case that you have in this. And then you have the debate around crypto as a client segment, Paxos, Coinbase, etc., like covering them as a client segment. So we tend to look at, when people talk about crypto or blockchain, we tend to think about it in those four areas. What are we talking in regards to as an asset class versus, blockchain as an enabler for payments versus tokenization versus as a segment? And if I focus really on, the point on, crypto in particular, that's captured a lot of the hearts and minds of people, in particular, given recent political dynamics that have been playing out in the US. And so when we think about those four use cases, we tend to think that crypto is the most mature and kind of almost, if you will, in or crossing that chasm, as Jeff Moore says, on regards to adoption. And so crypto as an asset class is very exciting, in spite of what people may believe or don't believe about it. But it has shown strong growth. I think the support in the U.S. between SAB 121, the Federal Deposit Insurance Corp, FDIC, and kind of some of their sentiment reinforces it. When you get into payments, that's a little bit different, because payments is inherently complex. If you're talking about retail versus wholesale, retail, we know that every market in Europe looks different, possibly because local acceptance requirements, local consumer preferences. Wholesale is complicated because it's highly regulated, and therefore has much stricter controls around sanctions, KYC, etc. And payments, in both of these spaces, the thing about retail is that it's highly competed by non-blockchain based providers. And so you do see payments penetrating into the retail consumer segment, and we see schemes like Visa and MasterCard supporting it. But if you ask me, the value is not necessarily in payments, because it is already a highly competed, typically comparatively efficient space. And so for me, this represents, kind of a novel innovation for some of those high friction B2C use cases. But I see more of the value, roughly speaking, in the wholesale space around some of these. And that's likely, might not be crypto, that might be a stable coin. Given, the fact that, especially in high value payments, you don't want a lot of volatility in your underlying payment currency. But I'd say payments is very exciting. Payments is very exciting, both on the retail side, how we're seeing crypto embraced by, schemes, such as Visa, MasterCard. The broader kind of CFI, DeFi is exciting on the wholesale because we really see stablecoin issuance volumes growing. I think it was over 200 billion. I think there's a million. I was looking at it the other day. I think there's almost like a million tokens printed. I think someone was saying monthly or daily. It was an astronomical number. And so there's a really lot of excitement around what this could be. So payments, I think, is exciting. I won't focus on tokenization or as an asset class, but crypto for us is, at that chasm and crossing the chasm, if you will, in our mind. We think payments is close behind it. And we think a lot of regulation like MiCAR, some of the points that I made around the US, further kind of support the acceleration of the adoption of these different, if you will, use cases for payments.
Yeah, in a way, you kind of anticipate part of the response of my next question because, okay, indeed, in the B2C, there is a lot of things happening right now that are very competing. I mean, are in a way better positioned than crypto. They are happening faster, and the user
Yeah,
experience is better than actually, yeah, using crypto to make purchases.
that's
But yeah, the crypto segment is enthusiastic about improving the user experience. So this might change a bit also in the B2C. But indeed, in the B2B area, it seems that there are a lot of yeah, benefits and advantages for corporations and businesses adopting these new payment rails like stable coins or I don't know, distributed
yeah.
ledger technologies in general. And if you think about yeah, disadvantages, however, companies are not there. What is stopping yeah, the adoption
Yeah.
of these new rails? And in a way, you gave a hint with the regulatory space that yeah, there are things happening,
Yeah.
but not enough
Well,
for.
yeah, I mean, well, first off, let's just kind of look at the history around this, right? So there was a lot of regulatory negativity around this.
Mhm.
Um, all of DeFi, which would include crypto, which would include, stable coins, as an example. So, you had the U.S. administration was negative against it. The FDIC was negative against it. A number of other kind of agencies within the U.S. were somewhat negative against it. And the U.S. is a huge market.
Yeah.
And so, and then so that's kind of the political and regulatory side. You also had, things such as SAB 121, which basically meant that if banks worked with, if banks had clients who were dealing in crypto, that banks had to consider that as a liability and risk, which meant they had to capitalize against it, which meant punitive. And one of the biggest
Yeah.
risks you face there is from, debanking. You start pushing people who are holding crypto out of the system. So you had this kind of political view that crypto was bad. You had a regulatory view that was somewhat punitive, around this. And so therefore banks were very reluctant to support it, and that's why you had different entities who have different regulation getting involved in this. PayPal, as a payment provider is very different regulation than a bank. Visa and MasterCard as a payment scheme, embracing it, they're regulated different than a bank. And so in many cases, the players who really got involved in this early on were the players who didn't have that exposure to the regulation and the political sentiment around this. Um, and so what happened is, most of the stablecoin and crypto payments was not something that banks would touch because of this sentiment. But now we've seen in the last 3 to 4 months, a lot of, if you will, shifting of opinions. MiCAR really helped in Europe, the fact that there was now a regulatory framework for stable coins, as an example. But in the US, a lot of it was just sentiment. The US now trying to position itself as a potential crypto capital. And that then unlocks, the change in regulation, SAB 121, which I mentioned, which was very punitive. That's now gone away,
Oh, okay.
as an
I was about
example.
to ask, yeah, what
Yeah.
happened with, yeah,
Yeah,
okay.
that has gone away. The FDIC has come out and said they're going to be much more open and supportive to this. So
Mhm.
now you have banks, especially large global and regional banks, who are now thinking about how I can deploy this. If it's helping my, if you will, B2B clients move treasury money around where they need to more efficiently, real time, lower cost. If it's helping them on moving their operational monies around, as an example, and more efficiently, but also thinking about how they can use some of this technology, for broader innovation, programmable money, and new schemes. So that's the really big change, in
Yeah,
payments,
yeah.
because when you think about stablecoins, you think about Tether and you think about Circle. You don't think about banks who have stablecoins out there, except maybe JP Morgan Coin, because they've been doing it a lot. But you don't really hear about banks, or you don't really hear about banks getting involved much in crypto payments, as an example. You know, a lot of it is because that sentiment, that regulatory view, that political view, but that has changed. And so now, you are going to see TradFi, number one, get them more involved. And I think you're going to also see with TradFi getting more involved, more fintechs getting involved because banks are going to need partners as part of this journey.
Yeah, so first, I have to many things I want to ask. So first, if you are to explain a bit in a nutshell, what do you consider and what is it TradFi, and to give some examples, and what is DeFi? Again, a
Yeah.
short definition and some examples.
Yeah. So TradFi are classic banks, right? Classic banks, third-party payment providers, essentially anybody who works in, an account-based,
Account
traditional
based. Okay.
technology environment. A CFI or a DeFi player could be something like Uniswap, somebody who basically works natively on a blockchain environment, or someone like Circle, or someone like Tether, or someone like Coinbase. And so this is, these are the two worlds that you now have, somewhat coming together in payments with support of regulation, with support of politics, etc.
Oh yeah, and the second thing I was curious about, we said, okay, there are so many benefits. Why aren't financial institutions joining this movement? Now we have more positive sentiment when it comes to regulation. So this might stimulate adoption. It's only regulation, could also be one thing. I don't know, related to budget or lack of talent,
It's
lack of knowledge. What do you think?
Well, I think there are so talent pools typically don't develop unless there's demand. Budgets typically don't develop unless there's demand. And I think a lot of, TradFi players have not really been pushing hard on this, and it's really been the environment for the DeFi, CeFi players who have kind of been, developing the talent, what have you. And as banks start leaning into this, they are recognizing, as you say, talent is a challenge. We can't just take people in our technology team and make them blockchain specialists. We can't just take our payments team and make them, deposit token or stablecoin experts. We need talent is important. I think the bigger constraint, if you ask me, is not talent per se. I think it's actually legacy. I think a lot of banks struggle with unlocking the value of some of this technology because the costs and challenges of integrating into their legacy frameworks, understanding kind of, the end-to-end risks that they need to manage and kind of how they address it. It's some of that more, I think, kind of in the nitty-gritty that banks struggle with. Talent clearly is always going to be talent's always an issue. I mean, it's not unique to crypto. I could say AI, I could say other themes that would also have kind of talent issues. But I think this one really starts coming from how do you embed it in your technology, your operations, your compliance. That tends to be, where it gets tricky.
Yeah, and if you are to sum up something like bullet points, what can stimulate crypto adoption? And you said one would be change your legacy, change your
I don't think it's
behavior.
changing. I don't think it's changing because
It's not
asking
change. Okay, okay.
Well, I think you have to be realistic, right? I mean, banks are heavy metal businesses. And when I say heavy metal, they've got a lot of infrastructure. You don't just throw out all of your technology and buy new technology. That's not how it works. It's unrealistic because technology is kind of like the heart. You just don't replace your heart unless you get to a critical issue. What I think will happen likely is that you're going to find alongside strategies, banks that will
Mhm.
start using technology alongside, and they'll use bridges, APIs, other
Okay.
mechanisms to manage it. And I think you're going to find that we'll see increasing third party development around these because in some cases banks might not have the talent, let alone the need to actually build this internally or the budgets, and so they could be working with third parties. So that's kind of how I look at it.
Yeah. So you mentioned this idea of bridging. What about, is there more chance to develop crypto products if you develop something like a spin-off, an arm of the bank that would deal only with crypto?
Yeah, but I mean, banks right now already have arms building this kind of stuff.
Okay, okay.
Yeah. So banks have that. I mean, even small European banks will have somebody in somebody in an innovation or a CITO who are looking at this technology. Now the question is how much they're really doing around it. And I think, each Europe is unique in the sense that we have a lot of small banks, and
Mm.
even those small banks likely are exploring this, but the challenge is, how they can unlock some of the value. from
Yeah,
this.
yeah.
And that's where I think, some of these questions come around. Well, I can't throw my old technology up with my new one. Maybe I run it alongside. Maybe I get a third party partner who's already given me, some existing banking services to also be able to provide this. I think we're going to see, I think you're going to see also, I would just say, is that I think, there's likely going to be some increasing crossover. There's going to be
Yeah.
some DeFi who I would expect buy TradFi, and I think you're going to see some banks buy some of these players as well, because some people are going to have stronger ambitions, and some people are going to feel acquisitions the easiest way to develop capabilities or talent. As you said, and as politics and regulations start blurring these lines, I suspect we're going to also see some M&A going after it.
And since yeah, I kind of touched your crystal ball. I feel I've touched it because you mentioned a lot about yeah, some predictions or anticipation what the market might do. And I'm curious, since yeah, you mentioned Europe, and returning to the first question, with your extended experience working in Asia, Africa, MENA, all over the world. Yeah, do you think that different parts of the world have different ways of I don't know, approaching technology, approaching innovation?
Yeah, of
Or do
course.
you yeah, maybe speak about this leapfrogging process might happen, maybe I don't know, in regions like Africa or MENA? The MENA, I think.
Well, I think, when I was in Asia, when I moved to Asia, I guess that's now 18 or 19 years ago. When I was in Asia, there was no Alibaba, there was no WeChat, there was none of that quote unquote innovation that everybody kind of looks east to now,
Yeah,
when they think of it. And the reality is that innovation happened because there was no banking infrastructure in place to really foster it. And so you had third party neobanks or fintechs really driving that innovation because they didn't have the legacy. And so I think the way that you just inherently see innovation happening in emerging markets or regions where there is no infrastructure is different than, say, when we look at Europe, which has very strong, each market has its own infrastructure, has its own regulation. Yes, it's overseen by the ECB, but each market, has different approaches. In Portugal, they like ATMs. In the Netherlands, everything is mobile.
yeah,
The Germans like cash but love crypto. There's a lot of legacy here, and there's a lot of heterogeneity, which I think makes it complicated, in this environment. But that said, I think that with the support of the ECB around MiCAR and other efforts, regulators are trying to make it easier. But I do think, in markets where you don't have an infrastructure, it's very easy to innovate, because
yeah,
essentially you're not competing with yourself, you're helping improve your capabilities. In some of these markets, especially in payments, it could be directly competing with banks' existing revenues, as an example. They're going to have to think about, the cost to invest and build these things. And when you already have existing technology and infrastructure that does that, it requires a very compelling business case to make that leap. And I think a lot of European banks are working through that business case. I've already got this legacy infrastructure. It works good enough. Some of this technology is still earlier days than others. I've got time. I've got time. And I think that's fair in some cases. But what we've looked at in the stablecoin market, and partly because of regulation, two players dominate it.
yeah.
And so there's a question, while institutions, let's say in Europe or other markets that have legacy, maybe have, if you will, kind of a large tier two, tier three bank segment, there is a question around, if you do delay involvement in this industry, be it blockchain-based businesses or crypto, when you actually decide to get involved, is the market going to be highly concentrated like what we see in stablecoins?
Oh
Where two
yeah.
players capture 80% of the market.
Yeah, since you mentioned Europe, will Europe catch up? I mean, in technology, AI, it seems that yeah, US is dominating, and now yeah, with Tether and USDC, will Europe catch up in the stablecoin? not race, game, or
Well, I think the last numbers I looked at, I think US dollar denominated was roughly 200 billion. I think euro denominated was around 40 or 50. So it's a pretty big quantum. I think
mm,
400x, something like that. Um, will Europe catch up? I suspect Europe would. I mean, I don't think stable coins. Uh, if you look, pardon me, let me say it this way. If you look at the dominance of payments, clearly the US dollar is a strong global payment currency.
yeah,
Euro is a
yeah,
strong global payment currency, followed by the sterling and yen and what have you. I expect from a stablecoin perspective, we might see some emergence similar to what we see in the current structure,
yeah, yeah,
because there are going to be certain people, there are going to be certain institutions, as an example, they're going to prefer dealing in a euro because that's a corporate will have a treasury currency and they want to deal in euros. There will be banks in Europe that will see value in this kind of stuff. And even if they're using it for their own internal movements or working with banks and third parties, they'll be using that as a payment mechanism. So, I definitely see I definitely see a role for a future version of a euro stablecoin, for
yeah,
many different reasons. And if anything, I think it would reflect very, to some degree, global trade and payment flows. But the question is, right now, the U.S. dominates the space.
yeah, yeah,
And we do see with MiCAR increasing issuance, or pardon me, increasing applications, including Netherlands, where I'm at. I think we have two or three players now that are already kind of moving into the stablecoin, and there's a lot of discussions around banks and consortiums. So I do think that we are seeing innovation, at least with peers kind of bringing this proposition to market, and hopefully they'll get traction. And I would suspect they would. But I do think it kind of is a new battleground. Whereas,
yeah,
fiat, U.S. dollar, sterling, euro, yen, RMB. Now we have the equivalent happening, but in a stablecoin environment. And right now, the U.S. is well ahead, but I think Europe has done a lot of great things with MiCAR, simplifying regulations, and in time, I expect Europe to kind of maybe not be at the same level of the U.S., but it's at least kind of something similar to what we see in kind of global payment mix.
yeah. Now, a more silly question is my curiosity. So, when we talk about Europe and regulation, we mention MiCAR. But when we talk, yeah, US, we say regulation. But today we didn't mention it actually. But most of the people say, oh, it's the new administration, the Donald Trump administration. And I have the feeling that there it's more a geopolitical influence, and in Europe it's more, yeah, it's a regulation and that's it. Do you have this feeling that in case something political happens in Europe, yeah, things might change on this front or not? Or
Well,
for Europe, it doesn't matter this aspect that much. This, I feel that, yeah, like you mentioned, in the US it's about sentiment, but in Europe I feel it's, yeah, about regulation.
I mean, I guess my thinking is right now, the only thing that's really changed in the U.S. is politics.
Yeah,
Politics. If you look at the BlackRock ETF that hit 50 billion in record time, it just happened to coincide, around the presidential elections and kind of the lead up to it, and so kind of got a Trump bump, if you will. Um, and Trump trying to position, at least making claims that he wants to, the crypto czar, to position the U.S. as a dominant crypto, kind of market. You know, I think that's very kind of classic, kind of U.S. and Trump, being very bold. I think Europe faces different challenges. In Europe we have highly localized and sophisticated domestic competitors. We really do. If you look across each of these markets, I'm in the Netherlands. We've got three very strong banks plus a number of third-party payment providers who are very strong.
yeah,
Um, and the same thing exists across most of Europe. The challenge is that from a cross-border perspective, we're highly reliant, and in some markets, we're highly reliant upon, international schemes, and so people look at Europe as a regulation. environment. But I think there's also, sovereignty concerns there. And I do think regulation is very important for fostering this. The big difference is that Europe isn't using the same microphone, as Trump, nor, being as specific, and around we want to dominate the world for it. That's just not a European style. So I mean, I think Europe is doing. I think Europe is taking right steps. I can't say that I agree with everything, but I can say they're taking the right steps. The big difference in my mind is they just don't have a vocal, outspoken individual at the ECB that is taking on the same level of intensity as what we see in the U.S.
Yeah, actually, I took some notes during the World Economic Forum. There was a discussion about how will the economy will be over the next year, and Kristalina Georgieva was speaking about how Americans perform, how Americans are seen. Oh, I don't seem to have it. And it was something like that the European are really modest, but the Americans tend to kind of boast everything.
Yeah, I mean, that's why I think it's a cultural difference. I do think that this technology, from a payments perspective, from an asset perspective, represents something unique for Europe. And I give the example of alongside that I was mentioning for the technology, but we know that Europe is trying to work towards a capital markets union. That could be a tokenized version of the future. That will need a payment leg, which could be public, or private sector. So I do think there's a lot of interesting forces at play in Europe that create breakout opportunities. I do think it's unfortunate that, Europe kind of gets tagged with this regulate, because I do think the intent is actually well-intentioned. The market loves transparency.
The
market benefits if there is transparency regulation. But, the U.S., in spite of the complexity and the regulation, just has a very loud cheerleader.
Yeah, and now because we promised our audience, probably they finished their coffee by now. 20 minutes of discussions, and you have so many things exciting to share that it would be a pity to end it, to have ended only in 20 minutes. But still, for my last thought, I'm curious to see what are the main crypto trends, blockchain based payments trends that our audience should be aware of, should follow in 2025. Maybe also this year, you mentioned building European capital markets.
Well, if I thought about the key trends that are going to shape, the coming years, and I had to kind of distill them because, when we talk about payments, we're talking about wholesale, we're talking about SME, we're talking about corporates and what have you.
You can take it. You can take it for each segment, maybe. I don't know. Or
well, here's what I would say. I mean, I think, the key trends for me are, and I'm looking more from a consumer perspective, versus say, a banking perspective. But I think, I think consumers are going to have more options. I think we are recognizing from a B2C perspective, while crypto might not be the dominant force, given all the innovation that already exists in retail, the reality is that there are unique users out there who want to be able to pay in crypto. And I think merchant acceptance and building that capability is going to be a key theme going forward. I mean, we have PayPal, we issuing their own stable coin. We have Visa, MasterCard now accepting crypto at point of acceptance. We have players in the US now using this technology for real-time payout for the gig economy. So I think those are going to be really big trends within the consumer perspective. I think in the wholesale perspective, you're going to see the application of blockchain increasingly to B2B payments. And I think there's going to be a section of that market which is historically underserved by banks just because of frictions, regulation, size of the institutions, complexity in covering, and what have you. But I think you're going to really see increasing fintech and TradFi players focusing on where they can deploy this to serve segments, maybe which were historically underserved, but easier to serve with more programmable based money, as an example, or areas to where, some of these B2B industries have had unique challenges around efficiency for which this technology can unlock it. So I do think B2B is going to be a really big topic going into the 2025 and
Yeah.
2026. So I do think crypto again will find its way but it's more of a merchant acceptance. I think for kind of the B2B, I think that's where you're going to see a lot of interesting excitement, both from crypto players as well as stablecoin players. I think we're just very early into the races of Tether and Circle. I think we're going to see a whole host of players attacking that through specialists type propositions, be it, healthcare, e-commerce, what have
Yeah,
you.
yeah,
So I think that
right.
one's big. I do think on kind of the broader large corporates and multinationals, this I think is exciting, but will take time. But I see that increasingly penetrating into that segment, through treasury movements and other things that just deliver real-time payments. But I think the big unlock, and this is one of the big trends I would say, is that while crypto and digital assets based payments, stablecoins, allow for real time payments, the industry still needs real time liquidity, and they
Mhm.
need real time yield to make this work. That's the thing about crypto. You get real time payments, but I also get real time yield. I can then also get liquidity if I want to lend them out and borrow them out. It works very nicely, from a crypto perspective, but it's not mainstream from a pure payments perspective. But I think for stable coins, what's interesting is when they can start connecting real time payments with real time yield. So now I'm getting my money faster. Now I can invest it for half a day, or an hour, because DeFi allows me to do that, or liquidity. Oh, I'm getting my money in real time, but it's not enough. I need some liquidity. How can I do some money market and repos for an hour, versus one day to get better liquidity? I think you're going to see a coming together of payments, liquidity, and yield, as part of some of these stablecoin strategies would be kind of one of the key themes. So that
Yeah.
payments will no longer just be purely for payments. It'll be payments for, essentially improving the treasurer. So I would say, those would be my views on
Yeah.
the trends.
That would help bridging in the crossing the chasm we mentioned in the beginning with traditional and then
Well,
DeFi.
I think that's for payments. Yeah, I mean, I think payments is
Yeah.
very close to crossing the chasm. I think we will get there very quickly with a lot of the points that we've discussed earlier around MiCAR, politics, regulation. Um, yeah. So I hope
Yeah.
that was helpful.
Oh, yeah, that was an exciting discussion. I learned a lot. I took notes here. And actually, yeah, I look forward to continue. I don't know, later in the year to see how many things of this have came true and how, yeah, sentiment or discourse goes from US to actually make it happen. Now we actually need yeah,
Yeah, yeah,
regulation.
yeah.
Yeah, so thank you, Jason, for today's discussion, and yeah, we look forward to see you next on the papers.
Thank you so much. Have a great day.